The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
From TFNN, welcome to the January 9th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine. 877-927-6648. Of course, if you can't call in, well, you can let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, just put radio show question like Kay and Lee have done thus far. It just makes it much easier for me to sift through the emails. And, of course, well, hey, inside the Tiger's Den, well, any ping will do, as we already had a ping, that coming from Harley Krishna. You got to love that. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 128 points, 0.5%. S&P's up 10. NASDAQ 100 up 15. Russell's up a couple. The semis are back 0.7% or $9. Otherwise, everything else is green. Spot volatility index is flat, trading out 951. Gold is not flat, back $8, doing what it should be doing, as you and I have identified here for probably about 10 days now. 5 at least trading sessions. Silver, the same thing. So we'll take a look at that. Light sweet crude up $1.25. That's 2% to the upside. Natural gas up about about 1.5%. Is what I should say. To the upside, leading dollar-wise, it is Mettler Toledo International, up nearly 3%. That's $18. Illumina up $17. That's over 7%. Priceline up $15. That's less than 1%. Intuitive Surgical brain salad surgery up $10 or 2.5%. To the downside, leading the charge, it is Acuity Brands, down $25, 13%. 3.2 million shares behind the move, very likely a move with volume, probably a gap with volume to the downside out there. Remember, gaps are our friends. You've got Netties trading down $7 or 2%. A Mercado Libre off $4 and 1%. But of course, I want to look at what you want to look at, and what Harley Krishna inside our Tigers Den wanted to look at was Valet. How about that? Ticker symbol is VALE. And of course, we got the pronunciation inside the den. We had one for Valley, and another for valet. So we're going with the valet just because I like saying that word a whole lot better. So let's go take a look. And now in this case here, what was requested? What was requested was, been following valet for about a month. Looks like it may be getting ready to pull back. We'd like to buy some between 11 and 12. What do you think? Weekly and monthly chart look good. So let's go take a look at ticker symbol VALE, also known as valet. At least that is Steve-O's pronunciation until proven otherwise. So the very first thing that we can do, Harley, is to go take a look at the A to B equals CD pattern. Let's go see where we are at in the stage of that. Now I'm going to go ahead and use the, for my A point, you could use that swing point for May 18th. Nothing wrong with doing that. I think the trend of that A to B leg really started right here on June 15th, so that's what I'm going to start with at the low. For the B point, it's going to be the September 7th high, and then a retracement down into the November 15th level. Now, a 53% retracement And so that price projection, Harley, 13.59. Now, Valet is, if I'm not mistaken, I know what they do. I just didn't know how to pronounce their name. It is a Brazilian mining company. So one of the things that you would need to do in really analyzing this would be to look at what's going on with the Brazilian currency, because there could be a very direct impact, just like with FCX and the Australian dollar. Now, you might say, where the heck did that come from? Nobody asked you about FCX and the Australian dollar. Well, I'm not going to do this with the Brazilian currency, but just as an example, I'll show you where I got that from and why you want to pay attention to these types of scenarios. I like saying that word. Here's FCX. Here's the chart on FCX. And here's the chart on the Australian dollar via the futures contract. And you can see just simply the direct correlation. Now, in the case of FCX, it is now pulled back below Stevie's red line. It says more retracement. I'm not going to go do an analysis. Just simply want to put forward, if you are trading this, it probably is not a bad idea to make sure you know what's going on with the currency pair. Now, what the conclusion that it looks like it's getting ready to pull back, maybe. This could be the completion of the A to B equals CD pattern. 1359 is the number of the 1-to-1. The high today made a higher high, 1342. It is a bearish reversal candle, so to speak. Here's the problem, Harley. I cannot look at this chart, and this is why I said, hey, you might want to look at the currencies. I can't look at this chart as a normal chart and take a look at these gaps and say gaps are our friend. In this chart here, gaps are meaningless. Gaps to the upside, at least I believe they are. Gaps to the upside, gaps to the downside, if there's currency conversions out here. And that's what it looks like to me when I see all these scatterbrained gaps that are out there. So the gaps on this are not our friend, unlike every other gap that we might look at. Though, of course, in the case of FCX, it would not necessarily be our friend. But do you know what I mean? So is this done? Is this the end of the A to B equals CD pattern out here? I don't know the answer to that. You were talking about a pullback into the $11 area. I think that's wishful thinking. I do think that is wishful thinking, but let's go see how wishful that thinking might be. Let's simply go ahead and put this chart out here, Stevie's other set of tools. Let's put up Valet, see where Stevie's red line is. It's at 1287. So 1287 is going to be a line of demarcation out there. If price gets below that, then what we're looking at is that little red dash line, which is around the 1180 type area. Can it get below? Anything can happen. But this looks pretty strong to me on the daily. More likely than not, this is getting ready to move up to the 1470 area, do the 1 to 1.272 A to B equals CD. I say that because I like how price is responding along the C to D leg. I like the fact that it only had a 50% retracement, or 53.75% retracement out here. And if we go take a look at the larger chart, when I say larger chart, I'm just really referring to the weekly out here. We've got a move here. So there was a swing point resistance level that was established at that high of 1170. That is old resistance. And guess what happens to old resistance? It becomes new support. So if you're looking to get in on the Valet, Harley, Krishna, I say check out the 1170 area. It may not get back to 11 buckaroonies. Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I take your phone calls and I take your emails. Let's go to the first email out here coming in from Kay. And Kay says, hope you're well. I'm well. I hope you're well as well. Well as well. How about that? Except for this torn hamstring. It is a booger. It is the most painful, one of the most painful sports injuries that I have had. You break a bone, that's, a little bit painful too, but it's painful. It is painful. Anyways, can I provide you with support levels on a 30-minute chart for the NDX 100? The easiest levels that I can provide you with would be, you want a 30-minute chart, would be for the NQ. Those would be reliable levels. So let's do that out here. Let me put this chart up. Let's go see what the NQ says. And you ask for a 30-minute. We'll give you a little bit more for your money out there. And we'll give you the 30-minute chart. Now, we take a look at the 30-minute NQ. What we're looking at is price right now is trading right into resistance of the top of its 30-minute profile, which is 6701.90. You're slightly above it. So basically it's into resistance, so to speak. Now, the bottom of the box out here has been around since about 10 o'clock this morning, right? So I just actually got back into the office, a little dental work out there, and you can see how when the market opened on this 30-minute chart out here, we can see that price just simply sold off right from the cash open out here and moved right down. You can see how that bar turned orange. That orange bar typically means there's a new profile forming. The bottom of that box happened to be the bottom of a box that formed right away, right as we came into that 10 o'clock time frame. There's another profile that formed out here at 11:30, but the bottom of the box out here is the same. So what does that mean? Is that a coincidence? Most people don't believe in coincidences, and if it's not coincidences, then 66.71 should be a strong level of support. One would say if you break a strong level of support, hey, that's a good sign that there's going to be a further retracement out here. However, Price is all the way back up to its highs. Looks pretty good as long as it stays above 67.0190. There's no reason why it can't run higher. Now let's go take a look at what's going on some other time frame charts out here. Well, if we look at the 240-minute time frame chart, what we're going to see is prices above that profiles box. Now, price got above that area back at about 10 o'clock yesterday. You'll notice that that is a bearish structured box. Bearish structured because the center line, not the center of the box, but the center line of the box, that little cyan color, closer to the top. We can see that how price pulled back earlier this morning, it found support. Found support where? Right at the top of that box. So that now was old resistance, has now become new support. So there's nothing bearish, so to speak, about the 240-minute chart, certainly nothing bearish about the daily chart, and most certainly nothing bearish about the weekly chart. There are patterns that are out there. Oh, sure, there are. But until you get the signal, it's just a pattern that's just kind of interesting to look at. It'll be more interesting if we get some type of signal, but it's not there. So hopefully that helps you out, Kay, in taking a look at 30-minute market profiles for the NQ. And it'll sort of be directly a result of the way that the NDX will trade out there. With regard to the NDX, because you asked, we take a look at the NDX out here. We just put the daily chart up here. You're gonna see a beautiful 3 drive to a top pattern. Well, it's sort of beautiful. It's not really that gorgeous, not really that sexy, because you don't have any kind of bearish reversal signal. It's just one of those patterns to take a look at and say, hey, those wings, that butterfly looks muy bueno. Now, we can also see that it is in wave number 6, letter F. The soonest that you could get wave number 7, the Stevie Wonder, singing in the key of G, would be Thursday. That's assuming that you have a lower high tomorrow out there. So I don't know if this is going to be one of those valid patterns or not. It's valid. It's not tradable. You certainly wouldn't go back up the truck and go ahead and short the Sam heck out of it. And let's face it, until the NDX gets below Stevie's red line of 66.02, it don't mean a thing. So don't take that swing. And that is the NDX 100, powering higher and above really all resistance levels that you and I can find. Let's go to Lee. Lee sent in a question. Says, hi, Steve. Hi, Lee. Hey, just a quick question on the IWM. We are pretty much the last sector to finally hit a new high. Do you feel this is just getting started, or is the IWM not worth investing in right now? This is a short-term 2 to 4 week trade. And that's Lee in San Francisco out there. Thanks so much for listening and writing in. I love that town, San Francisco. Great sushi bars. Hey, great everything. Of course, my favorite sushi bar, Lee, that's over in Sausalito. You got to go over there and over at Sushi Ron. And you can say hello to Yoshi from Stevie, one of the sake boys. So let's go take a look at IWM. That was too much information, I'm sure. If we take a look at the IWM, and I'll put it on this 3 time frame chart out here, let's just try to answer Lee's question. You know, you're talking about a 2 to 4 week time frame, Lee, and so the one thing that we've got to shake our head and get over, that's what Steve-O has to shake his head and get over, is the fact that we are in the unfavorable seasonal cycle. Now, you heard it here. You might say, what are you talking about? What's so unfavorable about this season, especially if you live in Florida out there? I'm trying to find the chart here. And what's unfavorable about it is with regard to your typical stock market behavior. And what I mean by that is this chart here. I don't think I got through this slideshow. Maybe I did yesterday doing Tom's show. So slideshow from this current slide. And the first thing, Lee, because you talk about the next couple of weeks. And this next couple of weeks is the one where I actually have a little bit of uncertainty. I mean, maybe a bit more than a little bit of uncertainty, just simply because of the natural pattern that exists, whether it's on the last 86 years, which are reflective in this chart, or whether it's on the years on average since the March 2009 level. It's certainly not working to the day, may not be working at all, except that in this case here, the cycle was you didn't form any kind of top or potential top until after the first week in trading. But we're now 2 days into that. This is the Dow. It hasn't identified a top. But these things don't have to work, to the day. So the next 2 weeks, it could be bumpy. It could be bumpy. Now, with regard to the IWM, here's what we know. If you were to say, hey, Steve-O, long-term, I'm a long-term investor. I just simply want to get into the IWM. Where do you think it's going? The IWM would say, hey, Lee, I love San Francisco too. And hop on that trolley car right now because I'm headed to probably 214.28 longer term. 155.36 is what it's printing at right now. 188.48 is in the cards. It's already baked in. At least it's baked into Stevie's A to B, or it's A to B equals C to the upside. If you had the art of timing the trade, you would go to page, I'm not sure what page it is, but you would go to the page that says, hey, if you cross the B point with a wide-ranging bar, accelerated volume, that's June 1st, 2015, 669 million shares was passed with 901 million shares. Lee, the IWM long-term is headed higher. The next 2 weeks, I'm not certain. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Now, look, I don't want to leave Lee hanging there. He was talking about the IWM. And hey, Lee, you're in San Francisco. When I did my West Coast trip back in November, the last place I had dinner at before heading out that following day was Sushi Cove. You like sushi? I'd never been there before. And parking is a bear. because it's really residential area. But Sushi Co, reasonably priced. Great fish that they bring in from Japan, and I would highly recommend it. Now, with regard to the IWM out here, a couple of things. This is, by the way, is the equity futures contract for the Russell 2000. And we take a look at weekly, daily, 240-minute chart. You'll see those green shoots out there, price above all the tops of the boxes. So all that looks good. One of the things that we do know that's going on in the IWM today, if we take a look at this chart here, the daily chart, you're going to see that the swing point that it's contending with happens to be the swing point from December the 4th. 36 million shares. The high there was 155.41. We're at 155.32. Well, the high today has been 155.50. So we've tested the high. We are trading back below it. And we're going to do it certainly on lighter volume because we're only at 7 million shares today. Even if we double it, which isn't likely, you're only at 14 to 15 million shares versus 36. So you will have what's called a failure on price and volume here, which then says, okay, you don't have enough energy to get the upside. That does not say short it. Am I clear? That does not say short it out here. Just says you don't have enough energy to get up and you might have to rest and recuperate. Shoot. This is above the top of its daily box of 153.74. Doesn't mean it won't pull back out there, but Lee's looking for the long entry. So don't get it now. Don't get into it now. Use this as a weapon of decision making, and maybe this thing will pull back. We'll just simply have to watch what occurs over the next couple of days out there. It is not a short under any circumstances, at least just yet. And that's on the IWM. But longer term, it's a beautiful looking chart. Now, we had another request that came in. We just have to get back to the emails out here. Let's go back here because if you spend time to write in, we are going to spend time to answer your question. James writes in. James says, is there much upside from here in UPS? So let's go take a look at UPS out here. You know what I don't know, James, is the seasonal pattern behind these stocks here, these stocks being FedEx, UPS, to know if there is a seasonal pattern because they just had their best quarter out here. But the question was, hey, there's so much upside from here with regard to UPS. Now, if we take a look at the longer-term chart out here, you're going to notice, I know your eyes are looking at it, somebody out there is saying, Steve, isn't that like a three drive to a top pattern out here? When you take a look at those three drive to a top patterns, the one thing you don't want to do is force it. And when I say force it, there basically should be symmetry between each of the drives. And that first drive here, if we're looking at it, would be on a monthly chart, January 2015. On the monthly chart, that second drive would be December 2016. That third drive really wouldn't take place until November 2018. So is this really a valid three drive to a top pattern? Now, you might say, what are you talking about? Nah, I don't think so. I don't think so. But here's what we do know from a monthly perspective, and this has been a heck of a month. Price is now above the swing point from December in 2016. That had 52 million shares. Today is only the sixth trading day out here in the month that we're talking about. This thing is blowing away a swing point with volume, with accelerated volume, with wide price spread, at least as we speak right now. And this has got at least a small A to B equals CD to the upside. So to answer your question, James, what is UPS doing, and does it have more upside? Well, at least it has 135.26 in it. You're at 129.40. But I doubt that it'll stop there. You say why? I say you do not make a D point with a wide-ranging bar and volume. It's just not the way a market ends. And this only did a 55% retracement out here. So UPS, I'd say, yes, it has more upside. Don't quote me on the next 30 minutes or even the next few days out here. We're just looking at a monthly chart to kind of get that feel for that upside and to dispel the myth here that this is even a potential three drive to a top. What it is a confirmed A to B equals CD. Now, I don't know where the month ends. And let's face it, James, this thing could peter out. And it could drop below and close below 120.44, that swing point out there. And, and then what's that say? Since you're coming into that swing point with volume, says you'd be right back up there. But more likely than not, the transports, or at least with regard to UPS, it has much more to go. I would say, though, to answer your question, go back and do a study. Go see how UPS trades during that first, second, third quarter of the year, fourth quarter. Just get a feel whether there's some kind of seasonal tendency inside of United Parcel Service out there. You know the interesting story behind United Parcel Service, don't you? You know that it was when we had the 4 big train companies out there, right? 4 big train companies. You know the names of them. And at that time in our historically, they controlled the market. They controlled basically the transportation market. And then there were these other guys who went out there and bought some Ford trucks that were rolling off of the assembly line back then. Now, any one of these train companies could have bought it, and it wouldn't have been a blip. But they thought they were in the railroad business. They didn't think of it really as the transportation business. They could have cornered that market too. So the question to always ask yourself is, hey, what business am I in? And there's got to be an and, what business should I be in? And that is a true story. And it's also the secret to being successful in any kind of business that you might be involved with. So ask yourself that question for your business. We've got another question that came in here. This one from Dan. Dan writes in, I'm short-term long. Whew. I had to take a deep. I was get the paddles out just to hit against my chest. I read that incorrectly. I am short-term long Tesla from 335. Where do you see this likely topping out? Dano. So let's go take a look at this. Let's put in the ticker symbol TSLA. I was reading while I was in the dental office that they had a problem. Not they, Tesla, but Elon Musk, SpaceX. Something about shooting off something out of Kennedy Space Center, some type of satellite that is lost in space out there, Will Robinson. That's what I heard. But nonetheless, we take a look at Tesla out here. I would say your target. Let's go with the assumption, Dan, that you are correct and being long Tesla. And then I would say your targets are, let's go with your targets are 347.44. That's all the way back up to the highs. We say that because the left-hand panel of the chart, that daily, has nice bullish structure. Daily chart, look at that wide-ranging bar from yesterday. You're back inside the range of the box. It's a bullish structured box. 347.44 is what it suggests. The weekly, that's back to the most recent swing point high. That's not back to the all-time high. The weekly also has a bullish profiled box. Hasn't really broken out of that. This says 363, even Steven, is its price target. And the monthly says no reason that it can't go to 386.99. And that is on TSLA. Let's go ahead and put up Tesla inside Stevie's other charting system. See if there's anything that pops up for Dan. And, it would be an A to B equals CD on the daily chart if it can take out that swing point. That swing point we're talking about, Dan, I'll use this as your benchmark. Trading day of December 14th, you'd like to see more than 5.7 million shares as price comes into it. Well, that was yesterday, 9.8. 347.44. That's your number, my friend. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. One of our dinners had requested to take a look at the TAS market profiles for Goldilocks out here. And as we take a look at it, you and I have been watching this like a hound for a couple of days out here. And finally, this morning, I don't have the exact time, but finally today, we'll just say today, we did get that new TAS market profile. And that really becomes a key level for us to be paying attention to. This now assists us with the support and resistance levels that we've all wanted out here. Of course, you and I have been looking at the next support level inside of Goldilocks. We're going to kind of flip back and forth out here. We've been looking at it as Stevie's red line. You have been waiting for gold, the gold contract, to test Stevie's red line. Currently priced at 1305.10. Now, that level may rise, it may fall. Price depends on what price is going to do, but these two are very likely going to meet up. Pretty cool, huh? Since we've been calling that for a number of days, 5-6 trading sessions at least out here. Subscribers have known for a long time as price was moving up, even when the GDX had that nice move higher, that in fact that move higher of 4 or 5 days ago was, hey, that's the signal, because it took that price offset right up to that zero or just above zero, and now is the time when price is going to pause. Wouldn't you like to know that? Don't you think that's cool? So now then you could go, now, I said, hey, we're staying. We're staying. We believe that gold has made a long-term bottom, and I don't want to be trying to get out only to not get back in at the appropriate time and would shake and then scratch my head and my chinny chin chin and say, why did we do that when longer term we had anticipated that there was a nice bottom that had formed out there? Nothing like a nice bottom. Now, if we take a look at 1305.10, we're not down there just yet, but we're getting close to Stevie's red line. If we can see price get down there, test it, bounce off of it, well, then you're headed higher. And much, much higher, 1377 and 1462, and then 2090, I think, was the number that I threw out yesterday when I did the segment on Tom's show. But this has got to be one step at a time. And so what we've got out here is we've got the 1305 area, and we have a brand new profile. The bottom of that box is 1302.50. Boy, it's nice to have two kind of confirming areas out here. And that's what you're going to be watching. Now, 1327 happens to be 1327.30 to be exact, happens to be the top of that new daily box. Unfortunately for you and I, this box here truly is equally balanced. And what I mean by that is that center line really looks to me to be in the center of that box. So not a bullish structure, not a bearish structure out here. It doesn't really mean that price has to get down to 1302.50. So you put that together with Stevie's red line. Those two twain shall meet, that being price and it. And then we will have, now that could very well be the buy point out there. We just have to take things one step at a time. These profiles are lovely vehicles. If we take a look at the weekly profile, that's the very right-hand panel, you'll see that is at 1322. That is where price found resistance, not to the tick, right? We use these as guidelines, but pretty darn good guideline. Just look at that 240-minute chart. You can see how gold has moved sideways between 1323 and 1309.10. Now, 1309.10 was not the low that we've seen today. We actually got down to a price point of 1309.50. So these profiles stink, don't they? They're not good for anything. It's off by 40 cents. Of course, the day's not over. Pretty good, huh? Now, that profile you can see had a bullish structure. That's panel number 3 if you're counting panels from the left-hand side of the screen, the one that says 240 minutes on it. So there's no reason that gold can't bounce up towards 1320. I don't know when the test of Stevie's red line and price is going to take place. I'd rather it be sooner than I would later. But those are your market profiles. At least a bounce to 1316 would make sense to me, right? Why would it make sense to you? Well, it makes sense to me because you've got a brand new 60-minute profile that does have a bullish structure. As long as 131020 holds, there's no reason for the bulls to not just go explore the 131680. Don't think that is the end of the retracement. Just I don't know if it is or it isn't. If we had to test Stevie's red line, that'd be a different story. But we don't have that. Someone might ask if I reviewed the ES now. That's what JB asked. I said somebody might ask that, and I haven't. But we will. But let's do this first, because I know on the minds of many out there is the question of, well, Steve-O, you covered gold, but you didn't say anything about that gosh darn GDX out there. You alluded to it. Stop alluding to it and tell me what your read is there. So if we take a look at the GDX, you're going to see that the GDX is trading below Stevie's red line. Uh-oh. And that number is 23.22, and we're trading at 23.14 right now. Now, the GDX is going to be powered by gold and silver for the most part. And so the mere fact that it's down below Stevie's red line, is that a problem? I don't see it as a problem. Not when I take a look at this. Not when I know the real control of the direction of this is really coming from gold and or silver. By the way, silver doing the same thing out here. Well, that's the 30-minute chart. You don't care about the 30-minute chart. You just want to see the daily chart out here. 1687 is its number. Hasn't hit it yet, but we're getting nice and close out there. And that's a beautiful thing. So could happen overnight. That's the thing. Could all happen overnight. It could be gone in the blink of an eye, and then you're just chasing the equity in the morning. All different types of things could happen out there. So we'll just remain long the mining ETF because, again, until proven otherwise, looks really, really good. There's one pattern out there that has me concerned. The hair on the back of my neck is standing up. Although I got a haircut not too long ago, and there's not much hair back there. But if it were back there, it'd be standing up. You might say, well, what are you talking about? Not the hair on your back. What is it that's got you concerned, a little bit concerned? And that's this chart here. I think I alluded to it yesterday. Can't recall. I alluded to it at some point in time. And that's when you and I, we take a look at the gold contract up here. That's the top priced in U.S. dollars. And if you were sitting right now having a, well, let's see, it's 148, you would be having a Guinness if you were sitting somewhere over in Europe. Well, you might be over in Germany and you wouldn't have a Guinness, but, you know, you might have, I don't know, a Dusseldorf. I don't even know if that's a beer, but you still might have one. And you'd be saying, hey, you only think of gold priced in terms of euros. Maybe think of gold priced in yen. Maybe think of gold priced in pounds. We think of gold priced in dollars out there. But that's not the secret behind trying to identify when there is a potential problem inside of Goldilocks. And the interesting thing out here is that the bottom chart, where it is gold priced in euros, which if you wanted to buy an ounce of gold today, a Krugerrand or a Maple Leaf or just any ounce, you'd be using the price point in euros right around 1101.60 plus whatever you had to pay as the premium on it. Now the 1101.70, yeah, it changes, right? What I'm watching is in essence the 1106 area. $5. You're going to sit there and say, "Come on, Steve-O, $5 has got you worried?" It does, because it hasn't really taken out its previous highs out there. And when that divergence exists, the sphincter muscle starts to tighten and says, it's a potential danger sign. Steve, don't get too caught up into the fact that you think long-term, gold is headed to the moon or 2090. This could be a SpaceX thing where the satellite and the rocket ship just kind of disappear. Your profits could disappear. I still go with the long-term thought. I'll really go with the long-term thought when the recent swing points inside of gold priced in euros gets taken out. Then we're going to a new atmosphere. We're going to go find the black hole. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last two questions that looks like we're going to be able to handle here. JB and the Den want to take a look at the ES Mini. We've got the 60, the 240, the daily, and the weekly timeframes up on this chart here, JB, with your market profiles. You're going to see that we've got nothing but green shoots, price above the tops of those boxes out here. So really all looks good. Everything looks good, as we take a look at the ES Mini. If I look at the daily chart, the only caution sign, and it's worth noting, is the mere fact that yesterday was a TD sequential 13 count. The day before was a TD combo 13 count. Do those matter? They don't matter right now. They would matter if you were to close below Stevie's red line, 27.33. You actually have to close below that, but that would be a start if price could close below that. If it doesn't, I don't see anything actually in the way. I don't see anything in the way. Some of these are patterns. When we take a look at these patterns, they're just potential patterns. That's why I say you need to know your P's and Q's, which means you need to know your Japanese candlesticks. Without them, you're missing out on the interpretation of the market. Now, IV wanted to take a look at the Spider S&P 500 banking ETF, and the question was, is this a good time to get into it? And if we take a look at it out here, IV, I'm going to put up the daily chart. What we can see is the most recent swing point inside KRE. That's a swing point from the trading session of December 4th at 15.6 million shares. You haven't hit it yet, but you're moving into it light volume, 4 million shares. That doesn't mean that, and look, if it takes it out with light volume, is it a problem? The answer is absolutely positively not. You say why? I say because there's already a confirmed A to B equals CD to the upside. So KRE, where it's headed to, it may not head there today, is 62.42. That's your 1-to-1 A to B equals CD projection. When 57.98, that's a trading day of October 27th, with 7 million shares, was passed with 25 million shares. Well, that said, it's going to motor on to the Motor City, which is 62.42, maybe 64.78. But is today the day to get in on that? Probably not. I would say probably not. But to answer your question, it does look like it's headed higher, volume or not. Folks, stay tuned. It's Terrific Tuesday. Your favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5. Andy Heck from 5 to 6. And I'll be back with you tomorrow on Wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.